Hey, real estate rock stars, welcome to the whole enchilada of real estate investing, the only podcast that serves up the full feast of street smart strategies to build wealth and take control of your financial future. I'm Lou Brown, and I've been in the real estate game since 1976, so I've learned how to make the whole plate worth it. Each week, I'll be dishing out creative financing hacks and proven systems that help investors build multi-million-dollar businesses. No fluff, just the good stuff straight from the source. Ready to dig in and start making deals? Let's get to it. Hey everyone, it's Lou Brown with another installment of the whole enchilada of real estate investing. I'm excited today to bring to you a master, someone who has a tremendous background. You're going to learn a lot about raising capital and about what to do and what not to do. We have Fuquan Bilal. And Fuquan, tell us about yourself and where you're from and all that good stuff, and then we'll deep dive into the goodies that we have.
Awesome. Yeah. So Quan Belau, CEO, fund manager of NNG Capital Fund. Let's see. I can go far back as 1999 when I jumped out the window and grew wings falling down, as they say. So started off doing some fix and flips and did that all the way until the 2008 market crash. After I picked my face up from the ground during that time, I transitioned into buying notes because the banks were the bad guys when they were foreclosing. So for them to sell notes behind the scenes became a strategy. And, we created a fund, our first fund in 2013 to buy notes. Before then, I was buying them on my own, creating case studies, using some of my own capital, going over the hill and getting the arrows in my back, so to speak, to prove that the concept worked. It was great. You can buy paper, workout situations where you could keep homeowners in the house and you become the bank. So we did that a lot all the way into about 2017. And then we transitioned into more of a hybrid model today where we raise capital to purchase multifamily buildings and luxury spec homes in New Jersey, where I'm from. So that's the short of it.
Wow. Wow. So that is the gambit. That is running the full spectrum all the way up to luxury homes in New Jersey. So, yeah, you have a variety of things going on, and it sounds like you've got the same entrepreneurial affliction that a lot of entrepreneurs have, which is called boredom. And we can get bored easily and quickly when we master something and then we move on to something else that can entertain us. Would that be you?
Yeah, it was something that is less stressful. Like I like the note business because there was no tenants, toilets, trash, and termites. And then yes, I did get bored and wanted to get back into the nitty gritty. And again, our whole mantra is helping people who are in need. I come from a low income area, single parent household, 5 kids, welfare. So growing up in that environment, flipping houses was great because I made a lot of money, but I wasn't really making a big impact other than revitalizing the community from which I came from. But as time went on, those deals became less profitable, and I had to move on to higher areas, more expensive areas. And that was part of the reason why we got started in multifamily after COVID. We made the transition to the southeast where we can, do our impact on a larger scale. So we'll buy anywhere from 40 units to 150 units, and we keep a percentage of those units for low income families, affordable rent, seniors who can't afford a rent bump. And we still do the fun stuff, which are the luxury spec homes in New Jersey, where we'll sell a house anywhere from 750,000 to, the highest one we have on the market. We just listed last week is 2.8 million.
Oh, yeah, baby. That's a beautiful thing. Yeah, I've got one I'm working on now that's going to be in that price range, and it's so much fun. It doesn't seem like there's an end to it, right?
Yeah, 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 yeah.
There's a lot of goodies. Well, you have been able to expand and do amazing things, and it's probably because you have figured out the secret weapon of capital raising and being able to tap into people's pocketbooks where they're sitting with idle funds they would love to put to work in a safe environment. Is that something that you've mastered?
Well, mastery is something that takes a lifetime, right? Raising capital is a whole nother business. We started our journey in 2013, and the reality of it is people have to get to know, like, and trust you in that order, and it takes time for you to build your resume, for you to build a track record. You get a lot of business from referrals. It takes time for people, more than likely, unless it comes from a referral network, people are just not going to invest with you when they meet you. They probably do a deal with you and see how that goes, see if you make your payments on time, see if you do what you're going to say. If they get reporting on time, they K1s, and then slowly but surely they'll open up and start investing more. They may go from a $50,000 investment to 100,000. The next thing you know, 4 years later, you have a $500,000 in your money, or sometimes more. So that's how the raising business go. You just have to be in the places where people can get to know, like, and trust you. Whether there's Rotary clubs, if you're Chamber of Commerce events, anywhere, charity events, anywhere you can put yourself where those affluent people are, country clubs, masterminds, where you have accredited high net worth people. Eventually, people will get to know you for what you do, and they'll be curious, and they'll want to do business with you. So
Brilliant, brilliant. You just gave us like a whole list of things for good people who are really out there and stirring the pot and willing to do the heavy lifting, so to speak, to go to those various networking events. But it is so very valuable because it's usually people with money and with connections that show up at those places. So it is highly valuable for you, and your advice is great. Get connected to those places and cause your business to occur. That's fantastic, and I love what you shared about. Hey, it might start low and it might start slow, but over time it grows. And definitely, I've seen that. I've had some people's money for literally over 30 years, and they don't want it back, do they? Once you've got it, they say, keep going and send us the interest payments, and we don't want it back. We don't have any place to put it, right?
yeah, I mean, everybody investment strategy is different. Some investors are looking for things that are short term. Some people are looking for long term. And what I realize is, as an investor gets towards retirement, they live off the cash flow, right? First is an equity play to increase the principal as much as they can, but as they get older and go towards retirement, it becomes an income play. So they're looking for things that can pay those bills, allow them to travel, and that's kind of what I've experienced. The younger investors, they want the multiples. They want to be in the equity deals. And the older investors, they just want that cash flow, so they can continue to live their lifestyle. So you are correct. Yeah.
Yeah, be very satisfied, right? I call it rocking chair money. It's
Yeah.
just putting out there, working, and they're getting their income off of that, and it's fine that it continues to work. That's a beautiful thing. Well, in your world, you have transitioned a lot of things. Now, in the financing side, I want to finish off with one more piece. What do you typically pay those investors?
Yeah, so it depends on the capital stack for each deal. So we get financing, let's just say, from a bank. If we're buying a multifamily, they'll be in first position. And then, if there's a mezz lending opportunity, which is second position in the capital stack, those investors will probably make anywhere between 9 and 12%. And then you have the preferred or common equity, where those investors are after senior, after mezz, where they'll make a little bit more. They probably make anywhere like 13%, but they have the highest risk, right? Most people, when it comes to multifamily, like to be at least in the second mezz position because there's still equity. If you look at it where you have the property 100%, the senior lender maybe 55, 65%, the mezz lender maybe up to 75%. So they're protected, and then the preferred or common equity would be anywhere between a 75 and 100%. And that's generally how the capital stack lay. So the returns are based on what they invest. Usually it's around a 3-year term, and it's a 50,000 minimum, somewhere around there.
That's pretty good. Uh,
Yeah.
and is this a traditional SEC type of
Yeah, it's
lending?
a PPM. Yes, it is. It's not a syndication. You'll see some formats where it's a syndicated deal and there's a pref plus equity. This is just pref. The way we have it structured is just pref, where they get those monthly payments, and they don't have to have the volatility of the market. Whether the operator performed or not, or whatever it is. It just needs to be enough cash flow that's coming out of the property to cover the interest that's due to the investors.
Excellent, excellent. So you've got this world of multifamily. Are you still doing single family homes other than
Yes,
the
yes,
high end?
yes, correct. Yeah, so we have a fund that's specifically structured for single families. It's our NNG fix and flip fund. And again, there, same thing. If there's an opportunity where we get fully funded from investors and they're in senior position, and they'll make 12%, that interest is deferred until the end of 24 months when the property sells. And if they're senior lien, they are in like mezz position again, less than 75% total loan is less than 75% LTV of the property, whether it's the first and second mezz position, and those are 12% deferred for 24 months. So they get paid when a property sells. It could be anywhere from a property we go in and gut kitchens and bathrooms and redo, get back on the market real quick, or it could be anywhere from a property needed addition or ground up construction project. The ground up construction projects are more profitable, but they tend to take a little bit longer here in North Jersey where we are. They can be anywhere from 18 to 24 months from, buying to selling.
And those are also multifamily, or those are single
No,
family?
those are single family homes. Those are
Okay.
single family homes where they're attached to that specific property. Some investors don't mind being in pooled funds, and some investors want to be attached to a single property. They just feel a little bit more security that way, that they have their money tied to a specific property. So investors who are interested in that type of investment, they will go into our fix and flip fund.
So Fuquan, you actually then resource the lot and then raise the capital, build the house from scratch, and then sell it. Is that correct?
Correct, absolutely.
Are you selling that to an investor or typically
No,
to
we're
a
selling it on the
homeowner?
market to a homeowner on the market. And our new construction in New Jersey, we're required to do a 10-year homeowner warranty. So that puts us heads and tails above the regular flippers who are just going in and putting lipstick on a pig. We're able to bring a quality product to the market with a 10-year warranty on mechanicals, roofing, and things like that. So that's really good. It's we get buyers quickly that way, and we're able to sell the properties literally, almost before they're done. So that's how they work with new construction.
That's pretty intense, a 10-year warranty. Wow.
Yeah. It's for structural foundation. Usually it comes with a 1-year cosmetic warranty, and it's through the state. So we just have to be responsible for the first year. Then after that, there's some insurance that if the homeowner puts in a claim, then the
Ah,
insurance will take care of it. Yeah, we're not on the hook for 10 years.
okay, I feel better
No.
now. I was going, that's giving me heart palpitations.
That'd have to be a $50 million property for sale. We'll have to make 40 million of that.
Now you're talking. Now, the single family homes, other than the luxury ones that you typically build, what price point are those?
Yeah, so they will go anywhere. The median home price in New Jersey is 650,000, by the way. So,
Mhm.
you're not going to get a decent house less than that in a good area where I'm speaking. So, we will buy anywhere from, 450 that we can turn around and put, 50, 60, 75,000 max into a property like that. And we'll try to sell it somewhere around 700,000. The goal on that is to try to make at least a $50,000 profit within 90 days, and that's on a quick flip. And sometimes it's more, it just depends. What the mechanicals are, if it's things that we need to replace, old electrical. We try to target a $75,000 max. So we're not going and putting in all brand new windows. We may just be doing kitchens and bathroom upgrades and some minor cosmetic things inside, maybe some siding or whatever, just to create some curb appeal. And we're in and out, usually within 90 days from buying to selling. And the other ones are the ground up construction, which takes some time, whether we're doing an addition to an existing property or we're tearing it down and rebuilding a new property.
Great, great. Well, that again spreads you out. So, what kind of team do you have?
Yeah, so we have our team consists of 15 people currently. Most of it is virtual. We have 9 people that are virtual from the Philippines that's been working with us for about 3 years, and they handle a lot of the administrative stuff, the procurement for the supplies, following up with permits, RFPs for contractors. They handle a lot of the administrative logistics, and our in-house team pretty much handle operations, whether we have asset managers, portfolio managers, our business relationship management department who takes care of the lending, insurance, general operations. So, we have a really solid team that help us cover the bases. And then we have our investor relations department as well, that help us with onboarding investors, making sure they get access to their portal, statements go out, K1s, and things like that.
I heard you mention monthly payments. So all your investors do receive monthly payments?
Correct.
That's pretty powerful. Sometimes people are quarterly or semi-annually or annually. And so that's powerful that you're sending out the payment every month. And definitely with that stack of where they fit in the criteria, it can be a very nice return, it sounds like. Now, when you are finding your properties, how do you typically find those properties?
Yeah, through wholesalers. So I've been in a business since '99. It's been a 26-year journey. So through relationships I created with real estate brokers, realtors, wholesalers, we do a lot of direct to marketing, where we send mailers out to homeowners. So we generate leads a lot of those ways, whether it's pain points, whether it's a tax lien they're going through, foreclosure, divorce, whatever it is. Title companies will help us also with leads for foreclosures they're managing. So just a variety of different places where we would generate leads. We haven't done any TV commercials, something we're looking to do. A lot of guys that I'm in masterminds with, they said they generate a lot of leads by doing TV commercials. I said, people still watch TV? I didn't know. I thought it was all streaming. They said,
They
no, people still watching the late night show where they can go on and buy stuff. And, those are the people looking to sell those houses.
And it's a different market. What's
Yeah.
fascinating about it, and I can definitely help you with that too, because we've got some of our licensees that are doing exactly that. They're doing TV, radio, and really all the media. And the interesting thing is, each one of those media are different customers that show up, and one actually benefits the other because it's being seen over here, but then they acted on it over there. And, so you've got that cumulative effect of credibility and definitely causes behavior on people's parts. So that's an interesting thing, and you do get good leads off of it. So I can connect you with some people that can help you with that too.
I appreciate that.
It's a beautiful thing. It's a beautiful thing. Well, we are very much into helping our folks to be able to grow and expand their businesses and really be able to help deserving families end up with home ownership. So that's our thing, is we help deserving families regardless of credit or financial background to end up with home ownership. So we do deal with a lot of different challenges. Some people, they have good enough credit and good enough down payment, but the banks don't love them because they are entrepreneurs, right? And so banks don't love entrepreneurs. They like to put them to the side. So we work with them as well as others. And definitely it's a fun ride in our world of certified affordable housing provider. Now you had mentioned something about being the bank for people. How do you do that?
Yeah, so the banks will actually sell paper. So you're probably talking about seller finance notes that you're doing with these homeowners, right? So
Correct.
we were buying notes that were underwritten from the banks. If you can recall when the GFC happened, the global financial crisis, the banks had to bail out, and they were the bad guys if they foreclosed. So they sold a lot of the paper, but they just assigned the mortgage and note over to you, and they did an allonge. They transferred the note over to you, so now you have the right to collect on that note. You may buy it at a discount, right? So you may have somewhere like they owed 150 UPB unpaid principal balance, and it was delinquent. Maybe they had a hiccup or whatever. The bank may have sold that to you maybe for 50, 40 cents on the dollar. The homeowner still owes the 150, so you get to get in there and work it out, reduce some principal, get some arrears, and get the payment going again, and season it where you can sell a partial, you could do collateral assignment, because the note is another instrument just like a property. So that's a whole nother investment strategy. It's just quite litigious because most homeowners won't make a decision until you are about to foreclose, and it can become very expensive, and you don't have control over it. Like with the property, I have control besides permits and architecture drawing timelines. But once we get the permits, I have the control of start to finish, getting the project on the market and making sure it sell. When it comes to multifamily, I have control to make sure we have operational efficiency with our property management. And we're the things that we want to do, specials, concessions, all of that stuff to drive that traffic. I have control over that. With the note, it's more emotional, and you don't have control over if the human is going to pay you because of whatever challenges they're going through in their end. You know,
So true, so true. And when you get in certain states, such as New Jersey, it can be
yeah,
very
judicial.
lengthy foreclosure process, right?
Yeah, most judicial states. So we used to purchase everywhere, notes in judicial and non-judicial states, but the non-judicial, of course, is more profitable because you can foreclose faster. No one, if we foreclose, we fail. That really wasn't our model. We really wanted to keep the homeowner in the house to work it out. But we have investors to answer to, and that's the underlying asset. And if we're not getting any communication, we're trying to work something out, and we have to move forward with that. So
Amen. Well, it is a challenge out there in the world, and it does depend on where you do it. How many states do you invest in? Which states are you attracted to?
right now, we're primarily focused on Georgia, Alabama, New Jersey. That's kind of where we have our real property footprint at. So that's what the focus is now. The
Yeah.
Southeast is where the multifamilies are, and only in New Jersey will we do the luxury spec homes or the fix and flips. Only in Jersey, North Jersey specifically, about 25 to 35 minutes away from the city. New York.
Yeah, yeah. So you're pulling them out of the city. Yeah,
Yep.
that's a good thing. Well, we are right here in the Atlanta, Georgia area, and definitely I get why you're interested in the Georgia, Alabama area for sure. Makes a lot of sense, and definitely you can be quite successful at it. So, if you were talking to the former you, meaning you when you were just getting started, what is it that you would do different? What did you learn from that gives you insight today that you would do different?
I wouldn't do anything different, actually. I would do it all the same because I made so many mistakes that I was able to learn from to make me who I am now. And I wouldn't want an easier path. I would want to go through all the pain that I went through, seriously, to grow because adversity brings growth. And, I had a lot of pain, especially after 2008, going through the divorce and going through that stuff. So I would have want to go down the same path to be who I am today. Um,
Amen. Amen to that. I was raised by a single mother immigrant to this country, and it was just the two of us. No brothers, sisters, cousins, uncles, aunts, nobody. And, so when you don't have a safety net, you have to rely on yourself. And my favorite saying, if it is to be, it is up to me. So it sounds like you have definitely adopted that in your world, and congratulations on that because one of my other sayings I love is it's all available for all of us. And it is the decision and the commitment to cause that to happen in your world that can bring that to you. So, congratulations on definitely taking advantage of what's available here in this country. And, you know, it's an endless supply of opportunity. We see the market changing, and I smile because I say that is all good. It's just not, people say, oh, that's bad. No, actually, for us, it's quite good. We don't want to put people in a position to fail at all. But by the same token, when someone is, crashing and burning, maybe they've already moved out of the property's sitting vacant, we can come in and take over that property. It's a beautiful thing. And definitely, as properties age, such as multifamilies, and we can come in and do a light rehab on it and move on with that project or keep it for cash flow purposes. Makes a lot of sense. And there's so many of these out there. You and I, we can't even scratch the surface of the opportunity that's out there. uh, when you are talking to someone and talk to our audience, and let's say that we got some newcomers here, they don't know which direction to go in. You've just laid out an interesting smorgasbord of opportunity that you're playing in a lot of different things. And someone that's just getting started, what would your advice be to them?
Education is always education. So, it just depends. If you have capital, the fix and flip business is really tough because it's capital intensive and then it pretty much eats you alive. So understanding the parts, and the processes and systems, that goes with it. You're going to have to do one eventually to learn from it, right? And make sure you refine your process. But things like wholesaling is really good. And if you got your real estate license, is great. That will get you in the business with just the cost of a license, and you'll get to rent some apartments. You'll be able to be at several construction projects. You'll learn that way. That's a low cost to entry. Partnering with people, becoming a passive investor, learning in that way through the education they provide. There's a variety of different ways that you can get in. It just depends on what position are you in financially and the time that you have for education.
Amen. Amen to that. Definitely education is a big piece of the puzzle. I tell people, there's many ways you can fail, and I call them fail points. There's many ways you can fail at this business, and it's such a great business that definitely you don't want to be X'd out of the business, and you can make one wrong move and you can be cast away. So I like to warn people about that and, give them the foundation. That's one of the things we do in our Street Smart world is give people that educational foundation so that they're in that safe zone. But a lot of people come to us and they own literally hundreds of properties and they adopt our business model on certified affordable housing provider and the branding and the step-by-step process. We actually provide a program called the Path to Home Ownership, where we help deserving families end up with home ownership. And we've got a stepped process that we put people through so that even if they're in apartments, they can grow up to eventual home ownership. So I love what you're doing, and definitely you've had some great success with that. Now, as far as resources go, what advice would you give to people from a resource standpoint? Are there any particular resources that you use, such as finding properties or funding or anything that would be a good share for people to take advantage of?
Yeah, so finding properties, there's a site, Crexy. I'm not sure if you're familiar with Crexy.com. That's a great site. Your local MLS is another great site. You can go into Facebook forums and connect locally. There's a lot of wholesale groups and a lot of local real estate groups posting deals there. That's on the deal side. For raising capital, people really want to see that you know what you're doing, right? Before same way if you was going to give somebody money, you want to know, one, they have the experience, they actually went full cycle in a deal. So that's the money will come, right? I would say it's more of a challenge finding a good deal than finding money for it. If you have a great deal, then money will follow it. And any savvy investor that lends money will see that, if the operator has the experience and the deal is good and there's a way to protect them, they'll move forward with it.
Fantastic, fantastic. Well, how do people reach you? What would you like to share in terms of people being able to find out more about you?
Yeah, I'm all over social media, Facebook at Fuquan Bilal, Instagram at Fuquan Bilal. If you are a accredited passive investor looking to make a great return, you can go to our website, nngcapitalfund.com, and you can schedule a discovery call. I can learn more about your investment goals and we can take it from there.
Oh man, fantastic. Any parting words you would like to share with our audience?
Time flies and you're the pilot. Pilot well.
Time flies and you're the pilot. I love
Yes,
that. That makes a lot of
pilot
sense.
well.
Well, we do thank you for your time today and your insights. And wow, what a great background you have. And keep up the great work, my friend. You got a wonderful thing happening for yourself.
I appreciate you, and I appreciate the opportunity.
Absolutely. Well, everybody, we will see you again soon on the whole enchilada of real estate investing. Yeah, baby. Thanks for tuning in to the whole enchilada of real estate investing. I hope you're feeling ready to take your investing game to the next level. If you're serious about building wealth, you won't want to miss the Millionaire Jumpstart. It's a 3-day live event that's perfect for any level of investor. Whether you're just getting started or you're looking to scale, this can be one of the final steps of making real wealth happen. So, what are you waiting for? Enroll now at millionairejumpstart.com and get ready to make big moves in your real estate journey. I'm Lou Brown. Until next time, keep hustling, and remember, it's not about how much you make, it's about how smart you play the game.